Indeed, thank you very, very much for staying with us here on KTN Business today. Now, in this second part of the show, we want, of course, to delve into that interview that we had talked about earlier. Plus, of course, news that we will be obtaining as the show does go on. But first, what happens in the unlikely event that a bank actually collapses? And with your money in there, are you able to obtain payment on your deposit? Well, that's a question that KTN's Nicole Njuguna had a chat about with the Kenya Deposit Insurance Company CEO Helen Chepkoni, bringing to light insight on deposit insurance and bank resolution. Take a look.
Good day to you, and today we are talking matters insurance and specifically deposit insurance and bank resolution with the Kenya Deposit Insurance Corporation, who provide a safety net for your deposits in the unlikely event that a bank fails or collapses. They promptly ensure that you're protected from the loss of your insured deposits. Joining me today is KDIC CEO, Mrs. Helen Chepkoni. Thank you very much and a warm welcome to the show. All right, tell us about KDIC. What is your mandate and what is your contribution to Kenya's socio-economic growth?
KDIC is a state corporation that was established under the KDI Act of 2012, and its main mandate was to provide deposit insurance for the unsophisticated depositors. And so the government saw it fit to set up a state organization that was to protect the depositors in the unlikely event of a bank failure. So our main, our main mandate is to provide that deposit insurance, to provide sound risk management frameworks, because our job is to enhance public confidence in Kenya's financial system so that people can be able to bring their money to the banks. And lastly, to provide what we call prompt resolution, so that in the unlikely event of a bank failure, we are able to pay promptly to the depositors of that failed bank and also resolve that institution.
So from your mandate, two things stand out: deposit insurance and bank resolution. Can you break down these two concepts for us?
So deposit insurance, as I've mentioned, is where we kind of, just like any other insurance, we provide deposit insurance. This is where we levy premiums on the commercial banks and microfinance that are regulated by the Central Bank of Kenya. They, on an annual basis, they pay a premium based on the amount of deposits that they are holding in their banks. So, and with that money, we are able to invest and build that fund so that as we grow the fund, in case of a bank failure, we are able to use those funds to pay the depositors. So that is the element of the deposit insurance. And with that, it helps the banking community be confident that behind those banks that you bank your money with, there is a KDIC with a good fund that if in case of a bank failure, we are going to pay them. And therefore, it reduces the jitteriness of the public if in case they hear there's a problem in this bank and this, knowing that even if that bank was to have a problem, they are assured of getting their money.
So is this a global practice or does it just happen locally?
Deposit insurance actually started in the United States all the way in 1934. I'm not sure of the year, but it has been used worldwide as a way of protecting the depositors. We currently have the International Association of Deposit Insurers, IADI, which is the body that sets the regulations and guides the deposit insurance worldwide. So Kenya is a proud member of that IADI, actually a founder member, and we adhere to those set guidelines as a KDIC.
You have been in existence since the Kenya Deposit Insurance Act of 2012 that effectively enhances your mandate. How has the journey been thus far? Tell us about it.
The journey has been, it has its own ups and downs. KDIC, as I mentioned, was set up after the 2012 KDI Act, but before that, it was a department of the Central Bank of Kenya. It was set up in 1989 under what they call the Deposit Protection Fund Board, and that was as a result of several bank failures during that time. The 1986-89 financial crisis in Kenya, where several banks failed. So the government of Kenya set up that Deposit Protection Fund Board, basically to protect those depositors. And since then, it has evolved and managed over, currently we have 19 financial institutions that are within KDIC that we are managing, and they are at various stages of resolution. Yes, and so they started with 9, and over time there have been other failures, but over time also we've been able to wind up some of the institutions.
So you mentioned deposit insurance. Why is this important, especially in the Kenyan context, given our savings culture and historical bank failures?
The element of deposit insurance is very critical in the support of the savings, bringing about a savings culture in the country. As I had mentioned earlier, our main public policy objective is to enhance the public confidence in Kenya's financial system. And how do we do that? By providing this deposit insurance. Therefore, when somebody knows that there is a deposit insurer that protects their deposits, they are more comfortable to take their money to the bank, knowing that even if in the unlikely event of that bank failure, they'll be able to get their money. And therefore, the public knowing of the existence of KDIC is very critical because it reduces the levels of uncertainties that can sometimes cause runs or bank runs in the banking sector. Because as you are aware, you can hear sometimes somebody says, oh, you remove your money from this bank. But when you know that these banks are regulated and they are stable, and there's a KDIC behind those institutions, then you'll not be keen to withdraw your money, take to another bank. The next day, they are telling you to remove again from another bank. Therefore, that brings about financial stability in the country.
The current coverage cap is 500,000. Why this amount, and is it up for consideration for review?
Currently, the cap is at 500,000. It is worth noting that from 1989, when it was set up, until 2021, we were at 100,000. And still, at 100,000, we were covering 96% of all depositors in the country. So when we increased to 500,000, we were able to increase to now what we have at 99%. Now, that amount is determined by the level of the economic activity in the country, our GDP levels, and there are so many factors that go into that determination on the amounts. So if already 99% are already covered, that shows you the levels of deposit in the country. And we are open for reviews. Over time, we are expected to do a review. And a review doesn't mean that every review will have to increase the coverage levels. Sometimes when we undertake a review, we find that maybe the economic factors are still the same. We might not even need to review. But we do undertake periodic reviews on the coverage.
So as a depositor, how do I know if my bank is protected, and do I incur any charges?
No depositor incurs any charges. When the banks pay the premiums, they are expected to absorb that as part of their operational costs, and the depositor doesn't pay any premium or is not charged any premium. Your other question was, how do I know?
How do I know?
Yes. Currently, we have 53 member institutions who pay the premiums to us. And it's expected that all these institutions display that they are protected by KDIC in their banking halls in a prominent way, so that depositors, when they go to their banking halls, they are able to confidently know that this institution is covered under KDIC.
So stakeholder management is critical because you're working closely with banks. What does this interface look like?
Our stakeholder engagement has been very good. We've had very good collaboration with our member institutions. We have frequent discussions whenever we are making any any changes in our regulations, and we have discussions with them. Just recently, we had a big stakeholder engagement where we were looking at how we can charge differential, what we call differential premium assessment, so that banks are charged according to their level of risk appetite. So we constantly have those engagements with our banks and microfinance banks, but also with other financial safety net players, because we know that financial stability in the country does not necessarily have to be only within the banking system. Sometimes risks can emanate from other areas, the real sector, the capital markets, or any other area. So we interact alongside other stakeholders, financial sector regulators, to ensure that all of us are speaking in one voice.
What is the current state of affairs of financial institutions under the management of KDIC?
Currently, our financial sector, our institutions are sound as per the reports that the central bank gives, and even our own. As I told you, we also monitor these institutions, and so far our institutions are sound and we do not have any issue.
Considering how bank resolution is important to the Kenyan depositor, break this down for us in terms of what is critical and important for you.
I will mention that what is critical for me is that public awareness. The public getting to know that there is KDIC. Because we've had instances where when a bank failed, people thought their money is gone. They just go and give up, and they never follow up on their monies. So what we are trying to do now, and is of critical importance, is to tell the public that there is an institution that actually provides deposit insurance for your deposits. So in the unlikely event of a failure, you should not just give up. That you should be able to have to come to KDIC, and you will be able to be paid up to the limit of your deposits, but of course until the limit of the protected deposit as it is right now.
All right, I'm curious about what have the challenges been so far, and what are the mitigation measures that you're putting in place?
Some of the challenges that I can mention right now, of course, as I've mentioned, the low public awareness is one of them. The other one is on the litigations, the long nature of our court system. So as I told you, that in resolution, most of the times we go after the debtors to recover the money so that we are able to pay the depositor. And sometimes that process takes us through the court systems, and some of them can take more than 10 years or 20 or even longer to resolve. And therefore, that has been a challenge. And the mitigation measures we are undertaking right now includes what we are adopting, what we call the alternative dispute resolution, where we are calling on those debtors. They come, we discuss with them, and we are able to amicably accept, because they also know that they took a loan with this institution, and that money has to be paid. Some people perceive that when a bank fails and you had a loan, you are happy, you think you have gotten away with it. But we are saying it is that money that we need so that we are able to pay the depositor. Because at the back of our mind, as at the top of our mandate, is to protect that depositor. And therefore, we have to look for all ways, all the monies that we are able to get, so that that depositor gets back their money.
So looking at your mandates, what are your achievements thus far, and how are you looking to further engagement?
So far, we've been able to grow the fund. As I said earlier, the fund growth is the one that shows the strength of the institution to be able to withstand if there are any bank failures. So I can say that our achievement is the growth of that fund. We've been able to invest well and be able to grow that fund. The other achievement is that review of coverage from moving from 100,000 to 500,000. That has ensured that more depositors are able to get their money. Right now we are able to cover many more depositors. The other one achievement is on the issue of risk-based premium assessment. So because of introduction of risk-based premium assessment, we've been able to kind of provide incentives for the banks to be able to undertake their risk management well, and therefore do their business in a better way, because they know that if they are not doing it well, they'll be charged higher premiums. So I can mention also that we've been able to pay over 93 billion Kenya shillings to our depositors over and above the protected deposits.
Interesting. So what should we expect from KDIC in the immediate and long term, considering technological advancements and e-money, especially in terms of creating awareness and furthering your position as Kenya's resolution authority?
KDIC intends to continue on this stakeholder engagement process and public awareness, because it is key to us that the public gets to know about us and gets to know what we do. And therefore, that's one of the areas that we'll be focusing on. And our strategic focus in our strategic plan includes the area of deposit insurance, where we'll be focusing also on how we will be able to cover our depositors better. On the area of risk management, the early interventions that I've mentioned, we'll be putting in also measures to ensure that we minimize bank failures completely. And therefore, we'll be working closely to ensure that those early interventions are undertaken, therefore not having the banks to come to us for resolution. Our other focus area is on the real prompt resolution now, in the likely event of a bank failure. And lastly, on our institutional capacity, we want to build our institutions to be able to now undertake those resolution measures that the mandate much more stronger as we go forward.
Give us a parting shot, even as we come to an end.
My parting shot would be that I'll be calling upon our depositors to take advantage of the deposit insurance that is offered by KDIC and continue saving their money with the banks that are regulated by the Central Bank of Kenya. And on the same matter, we are currently making payments, protected deposits to Imperial Bank that is in liquidation, and paying additional dividends for the BT Bank in liquidation, Daima Bank in liquidation, and Trade Bank in liquidation. So all the depositors that had their money within those institutions can lodge their claims with the KDIC headquarters and the central bank branches across the country.
All right, the message is simple. Kenyans should take advantage of deposit insurance. That has been KDIC CEO, Mrs. Helen Chepkoni. Thank you very much for joining us. My name is Nicole Njuguna.
Indeed, a very insightful conversation.